Chapter 16, Digital Accounting Systems. Key points in this chapter are: digital accounting systems use the same double-entry bookkeeping approach as in a manual accounting system. Their only differences are they're easy to input, so often the system will produce the double-entry journal itself from the input. So you'll produce a sales invoice and it will then create the journal that will go into the trade receivables control account and the customer's account in the sales ledger. There's no need for many of the daybooks because the digital system is entering the items individually to the ledgers, and it doesn't need, because the computer system doesn't need to add up all the items to post them as one journal to be able to add more effectively. There's no time saving for the computer. It's quite happy to do that instantaneously. Digital systems tend to use accounting convention in their account report, so if they use plus money and minus money for debits and credits, rather than provide a trial balance of debits and credits, there'll be a series of the general ledger accounts, and there'll be plus money for debits and there'll be minus money for credits. Debits and credits will tend to be used for journal entries. So in an entry screen you might see debits and credits there, but that's mainly just so they adds up. You could easily be going plus money, minus money, but it's only there so you can just sort of see that the journal adds up. It won't bother with sales invoice entries. You'll just create the sales invoice and they'll do the journal itself. Now, this digital accounting system is new for 2022, so it comes into this introduction to bookkeeping, and previously it would have been its own unit, Sage Accounting Systems, that have been dropped, so it's new coming in, so there's going to be some questions on it, but the examiner's view of digital accounting systems advantages is going to be summarised as sort of just financial transactions are faster to process and there's few errors. Now, in reality, there's a lot more advantages of that. There's improved ability to generate reports and interrogate data. So the data is now digital, so it now can be interrogated in Excel or Power BI, something like that, to be able to produce data and reports. The accounting system might produce an aged debtors analysis, so you can't get that in a manual system. There's greater compliance with processes, so you can force all the boxes to be entered in an electronic system for a manager to produce a purchase invoice, whereas in a manual one they can miss out all the number of boxes. So it's much more greater compliance with processes. You don't need the skilled staff members to operate the system. The sales ledger clerk creating the sales invoice does not need to understand double entry bookkeeping, or particularly the administrators who are doing raising purchase invoices or purchase orders in the departments. They don't need to understand double entry bookkeeping. They don't. The disadvantages of digital systems are that once an error creeps into the system, it is possible for errors to come into digital systems. Now, once they're in there, they're harder to spot. Once they've entered in there, so they're harder to they're less likely to occur. But once they get into the system, they're very hard to find. Now, the examiner highlights as well as an advantage the ability to process recurring journals. Now, a recurring journal basically is a series of journals set up for the future, and it processes itself again and again and again. And it's highlighted as a strength of the digital systems that this saves time. However, the examiner also highlights that they can generate errors if circumstances change. They can actually generate lots of other errors as well in there. So basically, it's a bit of a strange one here. Recurring journals are great and highlighted as a strength because they save time, but they have a much higher chance of creating errors in our system than all other journals, and we've spent ages trying to avoid errors in our systems, and also once they get into a digital system it's a disaster, but yet we're going to go ahead with recurring journals. There's also a problem as well that the recurring journals that have been stated within the ones that the examiner has available to themselves within this one, you would never use the recurring journals for cash items. You would only ever use them for non-cash, depreciation calculations in there, and even there it goes horribly wrong. So I don't know what the answer is on this one really. The examiner may pivot away from this and not sort of highlight it as a strength in there and put a big lump of questions in there. But in the draft assessment, there is a big recurring journals, the journal one in there. It is assuming posting to the bank. We'll go into it in detail when we go into the thing there. It's not a great plan. So let's go through then. So in terms of what is a digital system, so the advantages of electronic digital accounting systems versus predominantly manual systems is new to the syllabus for 2020. So it's definitely going to get a question on it, and as such there might be a period of adjustment for the purposes of exam questions, as the examiner's outlines of advantages do not necessarily cover some of the main advantages of digital accounting system. There is a catch-all in the syllabus that it saves time, and so in terms of what is a digital system before we start, well, it could be an Excel spreadsheet. So we're just sort of creating our books in an Excel spreadsheet, and it's doing it's adding up the purchase daybook for us, and we've got an equation that's linking it to the purchase ledger control account and to the accounts within the purchase ledger. Yeah, possible to create that. It could be a standalone software system, something like Sage, something like Xero, sitting in an office, or it could be going across a company network, so different offices, so all sharing the same system. Let's say some ledger system, something like that. And then alternatively, we're not going on the company's ledgers, company servers at all. So we're not on the company servers. Instead, we're operating it via the internet in the cloud. Now actually, now that Microsoft Teams has appeared and you can share Excel spreadsheets, everybody can work on the Excel spreadsheet at the same time as well. So previously, only one person at a time could work on the Excel spreadsheet. This was advantage that people could work on it in the same office altogether, but not across offices. This, well, yeah, they can all work together across offices. This one, yeah, they can all work throughout the entire world off the server into the cloud. But actually, now the Excel spreadsheet through Microsoft Teams, you can share the spreadsheet, and we can all work together on the same spreadsheet. But that's too advanced, and that's only just recent. That will the examiner won't have caught up to that position. So, in terms of the examiner's position on the syllabus, there is a catch-all in it, which is that digital systems save time, and that covers a multitude of different potential advantages that are not stated within the syllabus in there. So the additional advantages, I'm going to highlight all the additional advantages that can be possible of digital systems to be able to sort of see, especially if the examiner has to pivot away from this sort of statement of recurring journals being great. And to something else. What else will the examiner put in? What should they put in actually as well? Alternatively, it could be a question that just as a tutor, you might be deciding to improve the skills of your students and actually produce a more real life position. I mean, the idea of going along to a firm and deciding to do recurring journals is a bit interesting, especially the one stated. So here's the examiner's view of the advantage of digital systems. So automatically balances the daybook. So okay, it can add. Yeah, okay. Automatically completes the transfer of books to the prime entry to the ledgers and control accounts. So yeah, it can add and it can transfer data accurately. So it won't have any transposition errors, which is possible with a manual system. So saves time here. You'd have to add that up. Computer's going to do that instantaneously. I'm not going to make any errors when it's transferring to the ledgers and the control accounts. Actually, it's not going to have a book of prime entry most often because it's simply going to post all the journals individually. So it'll post all the sales invoices individually to the trade receivables control account and to the sales ledger accounts. We typically will tend to post them, and might on the wages one post them in blocks if possible, or you might have a sales run, but realistically it's just easier to see what's going on by seeing the individual journals. Automatically reconciles the receivables and payables accounts to their respective ledgers. So the trade receivables control account will automatically reconcile to the sales ledger control account. It's not actually that they're reconciling at all. The system doesn't do that. It just simply doesn't make a mistake when posting to each of the accounts. It's not going to post one figure to the trade receivables control account and another figure to the sales ledger control account. It's just going to post exactly the same figure. So it's not going to make a mistake, and that's why they reconcile. Not that it goes as a bit of a reconcile, but it doesn't. Creates a trial balance from the general ledger accounts. So in I think it's in chapter 5, I sort of highlight that how you have to balance down and create calculate. Well, it doesn't bother with balancing down. It just simply adds them all up, all the pluses and the plus money and all the minus money, and gives you a balanced figure on that account really. And then it will automatically create a trial balance from those accounts. So it give you a list of trial balances. You can pull that off as a report. Saves time. All right, catch-all. Well, I'll give you the additional stuff of how it saves time. And reduces errors and omissions. There's going to be less. There aren't going to be errors. It's not going to make adding up errors. It's not going to make transposition errors. So it's not going to have those errors in there. It might also give validation checks as well, so that you're not going to see sort of post something into the trade receivables control account and not into the sales ledger. So we'll avoid those ones. Again, though, this is a bit of a catch-all here in terms of of particular other things that might occur. I'll leave recurring entries for the moment here, and then the things automatically balances, because it can then, in terms of journals, it can say, well, all our your journal entries all have to have the same number of debits and credits. They have to balance. Otherwise, we won't post the journal, and therefore, it will automatically balance. Now, recurring entries. What is a recurring entry? A recurring entry is an entry that is set up to occur in the future, some points in the future, multiple times. And the examiner gives an example in the draft assessment that we're going to have a rent standing order set up for 6 months, and we're going to post this rent to the bank account. So we're going to go debit bank, credit, rent received on the basis of this standing order on these particular dates that we're going to theoretically assume that these things are going to be made. Now, that you would never assume that a payment will be made to the bank account like that, because what you've done then is you've done two things. You're only going to find if the person switched off the standing order because when you do the bank reconciliation. So you've lost time to be able to get hold of them and see what's going on here. You've cancelled the standing order. If we tracked it at all, in there, which is now we've got a different person looking at it compared to the person who would be normally saying it, and the person probably won't pay anyway because they haven't received a purchase invoice for the amount. So how are they going to get back the VAT? Because they haven't got a VAT invoice. Now, the examiner could say, well, you create 6 purchase invoices. Well, then now I've got a duplication of the journal. I've produced the purchase invoice, so I've gone. So I produced the sales invoice. So I've created 6 sales invoices. So I've gone credit sales or credit rent receivables here, credit VAT, debit trade receivables control account, but I've also done this as well, exactly the same thing when I was setting up this recurring journal. It doesn't work. And then it's well, okay, we're going to set up this recurring journal, and it's going to actually produce the sales invoice as well. Yeah, but you've got to remember to send it out. It's just a nonsense. So what you do in reality is, on a standing order, is you'd set up a separate spreadsheet with your standing orders, and you check that they've been paid to the bank account, and you probably raised your invoices while you're at it. Well, actually, you raised 1 invoice in advance for the whole of the period to be paid in particular instalments. So this doesn't work. And actually, one of the big issues about recurring entries is that it would create duplication. You've got a very high chance of creating duplication of entrants in there. One is the recurring entry journal that's created, and another one then is when you're trying to produce, let's say, the sales invoice or the purchase invoice or whatever it is. Now, well, this must be a thing. I mean, the examiner's not just plucked it out of thin air. So recurring entries, the problem the examiner's got with recurring entries and stating it as a strength and then trying to get it into the exam is that recurring entries wouldn't be used for the type of items that are covered in Level 2 Introduction to Bookkeeping. They would appear in Level 3 Advanced Bookkeeping, and they'll be non-cash items like depreciation. That's really where recurring entries appear. We've got an asset, and it's going to be depreciated over 20 years, and we're going to have 20 installments going in, and over those 20 years being posted, and so it's a depreciation thing, and you've set it up. So that's really where these things would appear. Nothing's going to be a disaster if you got that wrong, but that is possible. But unfortunately, the examiner doesn't have access to those particular items in this particular level of the unit, so as a consequence, it doesn't really work. Is that still a place to use recurring entries? Well, actually, still not, because what you can do is you can set up your recurring journal incorrectly, and when you're using it for depreciation, this journal was set up 20 years ago, let's say, and who on earth knows what's going on 20 years hence? Everybody's left. And so there's a real high chance, and it does happen quite frequently with a recurring journal, that it keeps going and it keeps producing these journals, and you end up with, let's say, a £50,000 vehicle that's being depreciated, and is actually worth minus £100,000 by the time you've gone past 20 years. So now you say, well, that should be picked up by the auditors. The auditors might not actually audit that particular entry, and they might only order things that happened in year. They might not go back and reconcile the whole of the fixed asset register to the amounts in the balance sheet. I used to, because I used to love to pick up on in recurring journals where people get it wrong and highlight that there's a massive negative asset within this business, and I think I need to restate your accounts. Which has happened a couple of times, really. That's why I'm saying that recurring entries in a software system just don't practically work. You're also as well on assuming that the software works. and software is produced by software developers, not by accountants. And recurring entries often don't have the validation checks within them to check that you've not created a negative asset. So, not the greatest of plans, really. I don't know. No, the one thing is it makes a good sort of inputting question. So I don't know. Right, so there's one within the walkthrough at the end of this playlist. In there, you can see where I sort of like get a bit stunned at one point, and what are we doing here? I would just be very careful. Now, I'm not sort of saying that the AAT syllabus is riddled with errors. It's not. Recurring entries you wouldn't really be doing. Reversing journals make a mess of management accounts and budget accounts for budget holders in there, and goal seeking spreadsheets is a waste of time. It can't be done by Excel, really. And those are the only three things I found so far. Where I disagree as a finance instructor of what's in the syllabus. So, real advantages of digital accounting systems, so that you're able to sort of pivot and have a bit of a common sense approach if the examiner changes slightly as well. So we've got this sort of saves time. Yes, that's the key point that's going on here. That is a key point of digital accounting system. It's posting more accurately, saving time. We don't have all the day books to go and do. Much more effective, really. In terms of those save time as well, save times, we can download things like the bank statement as well. The examiner does highlight you can download the bank statement and upload it. So might be a possibility that the examiner would say, right, we'll download the bank statement and code it to be put into the accounts. That would be my good. And maybe what would be a journal entry that's coming off that into the accounts. I think that'd be a reasonable question to replace, let's say, the recurring entries questions that they've created. But that's one answer. Other ones then, more important, just as important things in there. Data is available electronically for production of reports or implementation of validation checks. So we've got this sort of data that's available electronically that can now be downloaded into Excel or into Power BI or something, and we can produce information on how our business runs. And we can produce information on, the system might produce information on our aged debtors or our aged creditors and tell us when to make payments. And so it's producing all of these kind of calculations for us about reports and validation checks and what have you in there. And the entire world of business runs at the moment on these electronic accounting systems because of the production of all this data electronically and the ability to be able to interrogate what's going on in the business. It's not stated in the syllabus. Must come in there at some point, though. That would be strange. The whole point of electronic systems really is this production of data. Right. Compliance of entries and entries or compliance with systems. So it can do validation checks on journals to make sure that you don't put things in that are nonsense. It can also block people, so it can sort of say, well, journals are only going to be journals, that would go in the journal in the manual system will only be produced by the financial controller or by the finance director. Everybody else is blocked out from those. It can force compliance with systems, so it can say that, right, well, if you were in a manual system and we raised and a manager raised a purchase order, often they would miss out loads of the boxes, and they wouldn't put their own department in there or their own department code or whatever. Various sort of things would all be missed. Well, actually, in an electronic system, it just goes, well, you're not actually going to pass go until you've completed this box. It will also help with a lot of the boxes as well. You'll be manager X, and so it'll say, well, right, you've got access to these particular codes. Which one do you want to pick? So it's going to allow a much more compliance with the systems. Now, that would be a good answer to be sort of asking the question as well. Things don't sit on managers' desks or lost in internal posts. So in a manual system, the quotations or the purchase orders or the sales orders or the sales invoices or the purchase invoices, they're all on bits of paper and they're all flying around the systems in there. They typically go to manager X and then they get sent into the finance department in the post, and they just get lost, and it takes forever to do it, and everything's just lost in the body. It's a total mess. Takes ages. So instead, with an electronic system now, things are much faster, and in something like Proactis, which when it sort of suggests moving over to electronic sales invoices, say it's £14 per invoice processed. Doesn't really, but it does enough make sure that things go faster and there's more compliance. Less skilled staff members are required to operate the systems, so you don't need a person who understands all this sort of 5-stage accounting system and then double entry bookkeeping to be able to process a purchase order. The admin staff within the manager's admin staff are more than happy to produce the purchase order, and then that will create the sort of purchase order going out. And then we've got a sales invoice coming in, and we just got a person there reconciling that up to the purchase order. So it's a lot. You don't really need to have more skilled individuals. But interesting though that they will all probably still be AAT level 3 qualified within our finance department. Is that needed? No, not initially, but it is needed for progression, and therefore the ability to have a constant protection against staff members leaving, whatever, and being able to have people go up in the organisation. So that's the reason why you're doing the exams. And it'll do the calculation of journals sometimes. So instead of doing recurring entries, which is what the examiners are sort of suggesting, really, it will actually simply calculate the journal and suggest, well, I think this is what the journal should be. Would you like to post it? And then you can look at the journal and go, okay, I'll post that depreciation journal, really. Or you could look at it and go, well, actually, that doesn't work. That's not right. So typically within wages journals, really, there'll be a sort of a validation checks or whatever. It'll calculate the journal for you, and then you'll read it down, and you'll go, yeah, I'll agree with that. Or it might calculate the payment run for you, and you'll go down and go, well, actually, we're going to take supplier X and Y off the payment run in this one. So it'll do the calculation of journals and things like that. So those are the real advantages of the digital accounting systems. Going to be tricky, this section, really. I think there's going to be sort of an entry kind of thing to put in there, though, and then there's going to be a what is the advantages of a digital accounting systems. If it puts in recurring entries, the advantages are saves time. The disadvantages are they could introduce errors if the circumstances change. And we can sort of see, well, the circumstances change a lot. That's life. As a consequence, massive errors. You never do. Okay.